Welcome back, and joining me now for a closer look at the day's markets action is Graeme Körner from Körner Perspective. Thank you so much for your time, Graeme. Of course, we have to start off with the Fed minutes that the markets are digesting. Those that came out last night. Investors weren't really interested in anything else but the messaging leading to the September meeting. Did investors get what they were looking for in terms of things leading to a rate cut in September?
I think if anything, good evening. I think if anything, in the last day or so, we've had some things maybe suggesting that the Fed is slightly behind the curve. The revised labor data out of the US effectively saying, jobs created under non-farm payrolls well below what was previously anticipated, and also the flash manufacturing gauge for August also pointing to a further contraction. So I think, if anything, the market's assessment is that the Fed will definitely cut, and I think the bets are actually now on that maybe they'll do more than 25, although personally I don't think that's going to happen. I think they've been very measured and very cautious in the run-up to this, even if they're behind the curve. I don't think they're going to compound the mistake by cutting by 50 bips. So I think at the moment the market is like a market in record territory. Our market in the US as well, with the prospect of rate cuts, we just sort of maybe a little ahead of ourselves. And I think the prospect of maybe slowing growth in the US is spooking markets a little.
Well, Graeme, what's interesting to me is that even with all of this, the rand has broken above the 18 rand level against the dollar. Is it all because of the pressure that we're seeing in the commodities today?
I think that's exactly right. If you look, the top 40 was well over 1,000 points up at one point, and you had a bit of weakness in some of the local economy stocks, like the banks on average around midday. But we closed down 463 points, I think, on the top 40, and the bulk of that was a reversal in resources or basic materials, where previously, they were looking quite steady. The resources index closed down 2.1%. So if you look through the course of the day, it's basically just from that sort of let's call it that turning point market, very, very bearish suddenly on commodities. And you saw it in commodity prices as well. I mean, as we speak, palladium down about 2, platinum down also 2, even food commodities are down, and I saw natural gas, I think, was down 6%. So suddenly it looks as though commodities are in for a little bit of a sell-off. And you've seen, for example, the likes of iron ore already give back quite significantly from where it was not so long ago. So, I think weakness in commodity shares brought on in large part by the anxiety about growth in the US.
All right. Well, Graeme, taking it from basic materials to building materials and anxiety, let's talk about Cashbuild. They released a trading statement today. It was very light, no color at all. They just told us that where they expect their bottom line to be. So saying that they expect their bottom line to drop by as much as 30%. What's interesting to me is that Cashbuild, the stock price, has been in a state of decline. And we even saw that even when Italtal produced its own trading update, and today is a continuation of that. At some point, the Cashbuild stock dipped about 4%. This dip in the stock price and in the bottom line, nothing unexpected?
No, I think everybody knows it. If you look at data out in the last day or two, also talking about, in aggregate disposable income of households down, I think they were like 40% in terms of real disposable income. So I think it's no surprise. Food inflation generally has been high. A lot of households have probably battled to maintain their heads above water. Interest rates remain high, transport costs remain high. So arguably something like home renovations and extensions will be, kind of at the end of the shopping list. So you've seen Cashbuild was a market darling, but it's really, come all the way back to where it was in 2015. Just a really difficult trading environment.
Talking about difficult trading environment, that's been bad for Sibanye Stillwater. Today they made an announcement that they received a £500 million green loan for final expenditure needs for the Keliber lithium project in Finland. Does this provide, some financial flexibility for Sibanye, of course, which is known as the PGM miner with the weakest balance sheet?
Yeah, well, I mean, if you just look at a share price graph there, down on where it was 5 years ago, 6 years ago. So, yeah, it's really been a very difficult environment. I think the pivot into lithium and clean energy has been inspired, but I don't think it's enough to move the needle. So at its core, it's still a precious metals play, and you've seen it across the board. All the platinum miners are really, really battling, and you've even seen the pressure on Anglo American, to get out of Amplats and De Beers. So that's a very difficult space. I think this is good news for them, in terms of trying to reposition themselves. But unfortunately, on the day, no precious metal stock was going to have a good day, and the almost 4% slide in Sibanye, I don't think it was company specific. It was really just all the commodity stocks, and particularly the precious metals, getting hit hard.
All right. Well, let's get to your stock pick for today, Graeme. What are you hanging your hat on?
Well, I'm going to go with the Absa Group. They came out with results, and I think generally they guided the market that they were not going to be great. We know they're quite exposed to the middle income market. Yeah, so their earnings have disappointed, but if I look a year out, I think, they'll restore. We're very confident that rates are going to be cut. We believe that the SARB is going to follow the Fed, but you've seen South African inflation data supportive of rate cuts here. So I think that they'll be operating in a very different environment in 6 months' time. And then we'll look at this thing and we'll say, we were all crying in our beer because they weren't able to grow their earnings in FY24. And he has a business trading on a 7 multiple. Forward is a lot lower than that, and a divi yield of over 8%. So, if you look at what Standard Bank has done, is just put daylight between itself and Absa, for example. But I think Absa will have its day in the sun. It's just got to see a slightly better operating environment.
All right. Well, thank you so much for your time and for your insights today on what is moving investors' money. Graeme, that was Graeme Körner from Körner Perspective.